Welcome back to this channel. This is Unfiltered Forex, and today we'll be looking at the currency strength meter. The currency strength meter is something I use, something other traders use, but in this video I'll explain to you what it is and how I use it in day trading in relation to fundamental analysis, like how you trade the news by using this as an additional tool in your analysis. The definition: a currency strength meter is a technical indicator used by traders to obtain information about the strength of an individual currency relative to its peers. So, yeah, the currency strength meter just shows the strength of the currency. It's not, I can't say this definition is the best because it's not an indicator, it's a tool, it's the thing itself. Like, for example, the dollar index is the index that shows the strength of the dollar. The what do you call it? The euro index. The EXY is the index that shows the strength of the euro. So all these indices of individual currencies, they show the strength and weakness of a currency, and that's what this currency strength meter is. It shows the strength of one currency relative to a basket of many others. Okay, let the dollar index, for example. You know the dollar index, right? The DXY. This is it. Yeah. The DXY has components, right? The strength of the dollar is determined by this basket of currencies. Six. The euro, Japanese yen, pound sterling, Canadian dollar, Swedish krona, Swiss franc. These are the main currencies in the dollar index. The basket of currencies forming up the dollar index that, yeah, ultimately determine the strength or weakness of the dollar. So yeah, you can see the euro here is the biggest single contributor, contributing over half of the weight of the dollar index. So this essentially means in the dollar strength, right? Half of the dollar strength or weakness is affected by the strength of the euro. I hope we got that right because yeah, should understand that because the euro the euro USD, it's highly affected by the strength or weakness of the dollar, since the euro is, yeah, very heavy in the dollar index. But when it comes to the euro, you can see here weighting of the currencies to the euro. Yeah, in the euro currency index, this is the percentage. You can see here it's like an even split. Yeah, this is a quarter of these main currencies. This is the basket of currencies forming up the euro currency index, the EXY. That's what shows the strength or weakness of the euro currency. I believe you got that part. So yeah, let's look at the currency strength meter. The tools. I mean, yeah. Here, you can see there are many tools. There are many websites, I mean, that offer the currency strength meter. This is the currency strength meter.org, live chats UK, currency strength meter, and then there's market milk. These are the top 3 links you will get when you Google search this thing. As you can see, this link that's in purple, market milk, baby pips. This is the one I use. Let's click that. You will see in a few minutes, you will see why I prefer to use this one as opposed to other websites. So yeah, this is currency strength meter, 8 major currencies, 28 currency pairs. Monitor the strength of all major currencies all in real time. So this is it. Let me zoom out a bit. This is the thing itself. Currency strength meter. This, you can see it's moving, it's real time. This is showing what is the overall strength or weakness of individual major currencies today. This is for today, the daily. But today, the dollar is the strongest currency. Today, so far, the dollar is the strongest currency, and the CHF is the weakest. Currency strength chart. which currency has been strongest over the last 30 days. This chart now is like a bigger time frame. All over the last 30 days, you can see here this is in the beginning of July and now we're in the beginning of August. These are the currencies. This is the overall strength of the major currencies. The US dollar, if you just click it, you can see the US dollar kind of fell. Then on July 14th, this is when the Federal Reserve were hiking rates. The strength of the dollar picked up. And now you can see it's there. Another one you can look at is the Australian dollar. Since this is the weakest, the Australian dollar was mostly flat for the whole of July. Then at the beginning of August, this is where the Reserve Bank of Australia came in with another pause on the interest rate. And then, yeah, the currency fell, became weak. Then looking at another big currency, of course, the JPY. You can see JPY strength has been picking up. This is especially since the Bank of Japan said they will start the yield curve control, meaning it's a form of quantitative tightening. So yeah, it's a form of quantitative tightening. Considering how long the Bank of Japan has been pro QE, this is of course the YCC control is of course good news for the currency. That of course means the currency is going to gain strength over time. So you can see this chart. The euro is mostly flat, slightly picking up here. So this is it, right? This is the chart showing the strength of these currencies over the last 30 days. You can see here trend strength matrix, but this is not exactly important. What I consider most important is this strength chart and this meter overall. And then there's settings here. You can change the settings. Show 1 month, time interval 1 month. You can see what is the overall strength or weakness of individual major currencies this month. Now this is showing the strongest and the weakest currencies this month. The JPY you can see is the strongest and the Australian dollar is the weakest. Looking at this chart now, it has also updated itself. This showing for the last 12 months. Remember when this was daily, it was showing the last 30 days, but now since it's the last 30 days, now this chart is showing the last 12 months. You can see the CHF here steady uptrend, the US dollar here kind of weakening, the JPY kind of was weakening, now it's gaining strength. Yeah, this is it. Now let me go to the chart and show you what exactly you are supposed to do when it comes to trading. Fundamental analysis, choosing which pair to trade, and what do you call it? Yeah, and just making the most out of this tool. Something I should remind you though, even if it might be basic, it might be obvious to everyone, but let me just say this: if these currencies, you can see the best pair to trade is usually the strongest currency versus the weakest one. This is so in this case, Australian dollar versus the JPY, and you're going to trade that, and that's where you're likely to have the cleanest move in the long term. Because as you can remember here, this is the overall view for the month. The JPY has been the strongest, and the Australian dollar has been the weakest. Of course, as you have heard me mention a bit earlier when I was talking about this chart, these currency strengths are heavily determined by the monetary policy stance of the country. Like you've heard me talk about the Bank of Japan introducing YCC yield curve control, that of course means that's some form of tightening. That of course means their currency is going to get stronger over time. The US dollar, the Federal Reserve, they hiked rates in July, and yeah, their currency is gaining some strength due to the high rate environment in the dollar. The euro, another currency, very strong currency because the what do you call it? The ECB, the European Central Bank, they hiked rates recently also, and they say they are not close to getting the job done. That's it for the strong currency. Looking at the weak one, the Reserve Bank of Australia. This bank, they paused rates twice in a row. Let me show you that calendar. In fact, here we are. Reserve Bank of Australia. Australia interest rate decision. Actual forecast previous. Yeah, source Reserve Bank of Australia. So in the two recent meetings, the Reserve Bank of Australia has paused rate hikes. After they hiked in June, that was the last time they hiked rates. The market has been expecting them to hike rates, but they have always kept the rate constant this whole time. So you can see them adopting this dovish stance is, of course, going to affect interest rate expectations for this currency, and that's overall going to mean that this currency is relatively going to get weaker than the others. As we have seen here, this is the weakest currency, while currencies like the Japanese yen, which is usually the weakest, has now become the strongest because of the Bank of Japan deciding to introduce yield curve control. Okay, so that's it. Something else I should talk about is expectation. Now, if you are expecting weakness or strength in a currency for the next 1 or 2 hours, how do you know which currency to trade? Let me first of all switch to the default time frame here, the 1 day. This daily strength meter chart. This is obviously not it's not the best to use because it's yeah, as you saw from the definition, this is an indicator and therefore it's a bit lagging. This is not forward looking, right? So you can't base your analysis on what you are seeing here. But if you switch to the long term view, this is showing you a clear picture minus the noise, showing you a clear picture of which currency is actually strong, which currency is actually weak in the long term, which is, of course, affects the intraday moves. As you can see here, this in the last 12 months, yeah, this chart, the overview of this chart shows you which currency is the strong one, which currency is the weak one, and this is what I consider as the most important thing to look at, the most important time frame, the monthly one, because as you will see in a few, let me just give an example of the US dollar. If you watch the video on the NFP, the NFP breakdown and analysis I did, the link should be popping up somewhere if you didn't watch it. If you watch that video, then you know the NFP came out and there was some weakness in the dollar, right? This is the overall monthly view. But during that time, during that hour of the release, we were indeed expecting some weakness in the dollar should the job reports come in, cool, softening labor market numbers, and of course, that's going to affect interest rate expectations, and that's what's going to affect the strength or weakness of the currency. So during that time window, the 2 hours, the hour during the release, and even the next hour, the strength of the dollar was greatly affected. Let's just look at the dollar index first, the chart. Here we are. This is the dollar index, and this is Friday, 4th August. This is when the NFP report came out, and it came out at 12:30 GMT, 8:30 Eastern Time, 8:30 a.m. I think. Yeah, in GMT time, that's 3:30 p.m. Yeah. So this is the hour in which the NFP was released, and you can see the weakness. Okay, not the weakness. The strength of the dollar turned into weakness during these 2 hours, right? Because the job report came in soft, the numbers were soft, as I talked about in the previous video. The jobs numbers were soft, and that, of course, affected interest rate expectations, and that is what now affected the strength, the weakness of this currency. Yeah, but but remember, this is forex trading. You can't possibly okay. It is possible in some brokers to trade the DXY only, but yeah, for most brokers, you only have to trade currency pairs. For example, the euro versus the US dollar. Euro versus US dollar, GBP versus the US dollar, Australian dollar versus the US dollar. These are currency pairs you have to trade, right? So if you see here this move, you are expecting weakness in the dollar. What are you going to do? You are you are going to pair the strong currency with the weak one, right? The strong currency with the weak one. The strong currency in this case is what you're looking for because you have already seen or you are already expecting to see weakness in this dollar currency. The dollar, you're expecting weakness in the dollar, then you need to pair it with a strong currency. That's where the move will be most amplified. Okay, now let me go back to the chart. Here we are. If you're expecting weakness in the dollar, that means you have to pair this weak currency with a strong one. In this case, the Japanese yen and the euro are the best candidates for that particular trade. If you're expecting weakness in the dollar, then of course you need to trade the USD JPY and the euro dollar pair, euro USD pair. Right. Okay. Now let me say this. Let me say this line. If you're expecting weakness, let me say that again. Oh, you can see the dollar has gained strength even. Remember, this is the monthly time frame, so this is a big change. So if you're expecting weakness in the dollar, that means you have to trade the JPY, USD JPY, and the Euro USD pair. And you need to avoid trading out Australian dollar versus US dollar because these are two weak currency. If you are expecting to trade, if you're expecting weakness in the dollar, that means of course you don't trade a weak currency versus another weak currency because the move will not be as big as you would expect it. So yeah, you need to pair the strong currency with no, my bad. You need to pair the currency which you're expecting weakness in with other with the strong currencies. Let's just go to the chart and measure quantitatively so you can understand what I am talking about. Here we are. We'll be looking at this pair first, the Euro USD pair, the NFP move. This is what we're analyzing because we have already seen here from the dollar index. If you're expecting weakness in the dollar, you have to pair the weak currency with a strong one. Let's measure the degree of this move. This was, bam. The next for the 2 hours after the NFP release. Let's in fact do this. Yeah. So you can see here, during these 2 hours, the move on from the open to the close, the move here was 68 basis point. That's I don't know if that's 74 pips or 743 pips. I don't know how you measure that. You know what to do. Anyway, let's just call that 74, right? Yeah, so this is 74 pips from during the hour of the NFP till the close of the next hour. That move is 74 pips. Now we're going to compare. Now we're going to look at another strong currency versus the weak currency, which the weak currency in this case being the dollar. Let's look at the USD JPY. Here we are. Analyzing the NFP move. This is here we are on Friday. This is the open. Yeah, right there down to the close. Yep, that's it. Yep, from 12 p.m. GMT to the close of 1300 hours GMT. This move here is negative 93 pips. Of course, because this is the opposite currency, let's just call that 93 pips. 93 pips here and 74.3 pips here. Looking at the strength meter now. Oh my god. Yep, looking at the strength meter now, you can see the US dollar. Let's do this. And then. Yep. Looking at the strength meter, you can see the Japanese yen is the strongest currency. So if you're expecting weakness in the dollar, and yeah, the JPY is strong and the euro is also strong, that means there will be a bigger move on the Japanese yen than on the euro pair, because the Japanese yen is the stronger one. Euro is also strong, but not as strong as the yen. That's why there's a there's this difference in the move, the degree of the move. Here was 93 pips. When you go to the Euro USD, the move there was 74 pips. Yep, 93 pips, 74 pips. If you pair the weak currency versus the strongest, that's how it goes. Looking at the Australian dollar now. Now let's look at the Australian dollar versus the US dollar, because as I said, you should not pair a weak currency with another weak currency, of course. So remember, this is we're just analyzing the NFP move here. So even if this is like the second strongest currency strength meter, we're just highlighting during that time window of the NFP release, there was weakness in the dollar. Therefore, that's the currency we're considering weak here in the short term, comparing to currencies that are strong in the long term. And now we're comparing it to a currency that is weak in the long term also. Here we're expecting short term weakness. Let's compare to what we're expecting to see with a currency that is weak in the long term. Australian dollar versus US dollar. Yeah, this is the chart, and this is Friday. Yup, the NFP move. Let's do this again. This is the start of the hour and then the close of the next hour. As you can see here, the move was very small. This is 43 pips, right? This is legit a small move, big difference from the 74 pips we saw from the Euro USD pair. When you look at the Australian dollar versus US dollar pair, the move was only 43 pips, because the dollar, the dollar being the weak currency during at the time, comparing it to another weak currency, the move here will not be as big as when you are pairing a weak currency with the strong ones, right? Yep, that's it. If we look at the New Zealand dollar versus the US dollar, we're going to see the same situation also. Let's just we just do that. New Zealand dollar versus US dollar. Yep, this is the NFP move from the open to the close of the next hour. Done. This is where we are now. 39.2 pips. You can see here this move was even less than the move we saw on the Australian dollar. Remember, on the Australian dollar versus the US dollar, the move was 43 pips, and now on the NZD USD pair, we are seeing the move was only 39 pips. But because these are two weak currencies at the time. The US dollar was weakening, and the New Zealand dollar was also weakening, and even the Australian dollar is also weak in the long term. So if you pair weak currencies, you're going to get a small move. But if you pair a weak currency in the short term with a currency that is strong in the long term, you're going to get the results, a big move like we saw here. I hope you have I have done the best I could do in showing this case study, this scenario of what to expect. I think I'll wind this up now. Otherwise, I hope you have learned something new, because it's a big misconception in forex about how to use the currency strength meter, how not to use it. I was just showing you how I use it and how I am able to get A plus setups day in, day out, while trading fundamentals in the short term, relating it to long term moves, long term market scenarios, considering all these all these main factors and how you to get the best out of your analysis, to get the how to get the best out of your fundamental analysis. It's the same for other currencies, honestly. If you were expecting weakness in the Canadian dollar, you need to pair the weak the weak Canadian dollar with a strong currency. Personally, I only trade the majors. I don't trade cross pairs, so everything is involving the dollar. That's why, because the dollar strength is very volatile and it's good for day trading. When it comes to these other currencies, they move at irregular intervals, but understanding the monetary policy stance of the central banks will really help you understand how to trade, how to approach this. And as you can see, I have not talked about these three mostly. I have not talked about the Swiss franc. I have not talked about the pound. I have not talked about the Canadian dollar because, again, if you're pairing a strong currency, if you want to trade the strength of the dollar, for example, you need to pair with the weakest to get the biggest move. If you're expecting to trade strength in the Japanese yen, you need to pair it with the weakest to get the biggest move. That should be self-explanatory by now. Otherwise, this is the best time frame to use because this is the one that gives you a clear picture of what these currencies are doing in the long term for you to be able to make short-term decisions accurately. And I am done. Have a lovely week and yeah, have a lovely week.